10 ways rich people avoid paying taxes. Welcome back, future millionaires. Today, we're pulling back the curtain on one of the most misunderstood and powerful realities of the rich: how the wealthy avoid paying massive taxes legally. If you want to level up financially, mastering the art of keeping your money is just as important as making it. And guess what? The government has built an entire playbook for those who are smart enough to learn the rules. So sit back, take notes, and get ready to rethink everything you thought you knew about money and taxes. Let's dive in. 1. They own businesses, not jobs. The poor and middle class work for money. The rich make money work for them. When you have a job, you get taxed before you ever even see your money. Taxes, Social Security, Medicare, it all gets stripped out first. But when you own a business, you earn first. Then you spend on expenses. And then, only then, do you pay taxes on what's left. Your car, business expense. Your phone, business expense. Your laptop, travel, marketing costs, all legal write-offs that reduce your taxable income. Here's a simple question. If the government is rewarding business owners, why are you still acting like an employee? Would you rather be taxed first or spend first and pay less later? Comment below. Owner mindset if you're ready to start thinking like the rich. 2. They own assets free and clear. While some rich people borrow against their assets, the smartest and most disciplined wealth builders do it differently. They own assets debt-free. Instead of constantly leveraging themselves with risky loans, they build their wealth methodically, buying real estate without mortgages, owning businesses without heavy debt, investing in stocks with cash, not margin. Dave Ramsey says it best: the borrower is slave to the lender. Rich people who think long-term avoid unnecessary debt because they know freedom comes from ownership, not borrowing. When you own something outright, your home, your business, your investments, nobody can take it away. You're not at the mercy of rising interest rates or panicking banks. You control your future. Question: would you rather live in a mansion the bank technically owns, or a paid-off home that belongs 100% to you? Comment below. Debt-free wealth. If you believe true wealth is ownership without chains. 3. They maximize depreciation. Depreciation is one of the biggest secrets in the rich person's toolbox. Here's the basic idea. You buy an asset, usually real estate or equipment. Even if the asset is going up in value, the IRS lets you pretend it's losing value every year. And you can deduct that phantom loss from your taxable income. Let's say you buy a $500,000 rental property. The IRS lets you depreciate that building over 27.5 years. That's about $18,000 per year of paper losses, even if your property is actually rising in value. And guess what? There's something called bonus depreciation, where you can front-load a lot of those deductions in the early years. It's like putting your taxes on sale. Have you ever thought about buying a rental property? Tell us, would you rather be taxed on phantom losses or phantom gains? Comment Cash Flow King if you're seeing how this game works. 4. They use retirement accounts differently. Everyone talks about 401ks and Roth IRAs. Dave Ramsey preaches it religiously. Max out your Roth, get the match. And it's good advice, but rich people go way further. They set up self-directed IRAs, solo 401ks, and even defined benefit plans that allow them to stash away 6 figures per year, all tax protected. And the best part? Self-directed IRAs let you invest in almost anything. real estate, startups, gold, crypto, all while staying inside your tax shelter. Imagine buying a startup inside your IRA. It 10x's in value, and you owe zero taxes when you cash out. Think your employer's 401k plan is still enough? Think again. Who's ready to start playing offense with their retirement accounts? Drop Retire Rich if you're ready to build wealth the smart way. 5. They move to tax-friendly states or countries. When taxes get too high, rich people simply leave, and it's perfectly legal. Florida, Texas, Tennessee, Nevada, zero state income tax. Puerto Rico, move there for half the year under Act 60, and you could legally slash your federal tax bill too. It's why billionaires, tech founders, and crypto kings are packing up and moving. Are you willing to move for more freedom and more wealth? If you could pick anywhere to save more money and live better, where would it be? Comment your dream location below. Let's dream big. 6. They start foundations and charities. Rich people don't just give money away. They build legacies. When you start your own foundation, you can get massive tax deductions, keep control over how the money is used, create a lasting impact. Bill Gates, Warren Buffett, Mark Zuckerberg all have their own foundations. But you don't have to be a billionaire to start. Even a small family foundation can shield money from taxes and fund causes you care about for generations. Would you start your own foundation if it meant you could create a lasting legacy and lower your taxes? Drop a legacy builder if you'd create something bigger than yourself. 7. They use 1031 exchanges. In real estate, there's a powerful little law called Section 1031. It says, if you sell a property and reinvest the profits into another like-kind property, you can defer paying taxes indefinitely. You can keep exchanging properties again and again, upgrading every time, and never triggering a taxable event. This is how small-time landlords build empires. Start with a duplex, upgrade to a fourplex, then an apartment building, then a strip mall, all while legally kicking the tax bill down the road. Would you delay gratification today if it meant building an empire tomorrow? Comment Empire Builder if you're playing the long game. 8. They hire elite accountants and lawyers. You might think doing your own taxes saves you money. The rich think differently. They invest in experts who make them more money. A great CPA will find deductions you didn't know existed. Structure your income for maximum tax savings. Keep you legally protected while minimizing taxes. Warren Buffett famously said, "Price is what you pay. Value is what you get." If an elite accountant costs you $20,000 a year but saves you $100,000 in taxes, that's a 500% return on investment. Are you willing to pay for expertise to keep more of what you earn? Comment Smart Money if you believe investing in knowledge beats trying to do it all yourself. 9. They earn capital gains, not salaries. This is one of the biggest mindset shifts you can make. Salaries are taxed aggressively. Capital gains, profits from selling stocks, real estate, and businesses, are taxed at much lower rates. And if you hold assets long enough, you even get long-term capital gains rates, which are even lower. The rich focus on buying assets that go up in value, not trading time for money. If you want freedom, you need assets paying you, not a boss. What's your plan for building assets? Comment Asset Builder if you're ready to escape the paycheck-to-paycheck cycle for good. 10. They plan for generational wealth. Finally, the richest among us don't just plan for the next year. They plan for the next 100 years. They set up family trusts, dynasty trusts, life insurance strategies, estate plans, all carefully crafted to minimize estate taxes, maximize wealth transfer, and protect their money from being squandered. It's not about dying rich. It's about building a dynasty that keeps growing long after you're gone. Are you thinking just about your next vacation or your great-grandchildren's future? Comment generational mindset if you're ready to start thinking bigger than yourself. Final thought. The reality is simple. The system isn't designed to make you poor. It's designed to reward those who understand it. The rich don't cheat the system. They study it, master it, and win at it. And today, you've been given the playbook. The question is, what will you do with it? Will you complain about the rules? Or will you start playing to win? Comment below. Which of these 10 tax strategies blew your mind the most? Which one will you start using first? And if you learned something today, if a light bulb went off in your mind, drop Luxona in the comments. Let's see who's committed to playing the game and winning it. This is Luxona, where millionaires are made.